ask your realtor how many transactions they've done with that mortgage lender relative to the number of times I've had lunch with them. That's it. That's it.
So what's the
yeah,
metric
sniff it
then?
out. Yeah.
More lunch?
I don't know, but if somebody
is the
said I've had
worst,
lunch
or-
with them 3 times and I've done 1 transaction, I sent my last client over there, I'd be like, oh, seems like he's buying you a lot of lunch for, let's go. What, why are you really sending me there?
Yeah.
Yeah. I think Sean and I are alike though. Price matters, and we want to give a fair, aggressive price to our consumers. But my ideal client is not the price shopper that's going to call 15 different institutions, because then it turns into this ping pong thing, and there's nothing worse than feeling like a used car salesman where and I see it all the time in the industry. You present a quote and they lower the rate an eighth, and then the next time they leave the rate the same and they lower, a $500 fee, and you feel like this back and forth. I'm more of the mindset of, if a consumer is going to do what you're saying and negotiate aggressively, I usually go down and say, hey, this is the lowest I can possibly go with the way that the margins and the way that my company is set up.
Sure.
Take it or leave it. Right? I take the Carvana, or what's the other one like Carvana? They don't negotiate in price because they know that they're lower than market anyway.
CarMax or something.
It's not CarMax. What's the other one?
It actually went out of business.
I think it's Tyler.
Vroom.
It's gone.
Oh, I was going to say Tyler Ducharme at
bummer.
Wild Honda in Waukesha, Wisconsin. I'm just kidding. But my little brother owns a dealership out there.
But you see my point. It's one of those, like, I just don't have the time and energy to do the whole back and forth when someone's leveraging me against 10 other lenders. Like, I'm going to give you a good deal. I'm going to give you, but I'm not going to do this back and forth thing. And then, because when you're doing that and someone's going back and forth and it takes over 4 or 5 days, the industry is changing what that pricing is too. So you're pricing a moving target. So
well, you're pricing a moving target, and there's a deadline at the end that consumers don't realize that they're up against the wall sometimes on closing on that property the right way. So
I just want to highlight that, because telling a consumer just to become educated and negotiate like hell, I don't necessarily think that's the best advice either.
Yeah.
No, I agree 100%.
No, I'm highlighting. I don't think that is the best advice. I think it's a poor tactic, is what I want to be very specific. I think that's a poor tactic. Yeah. What's better is to educate yourself on what does a fair deal look like? Mm-hmm. And how do I find somebody that's going to shoot me straight?
Yeah.
Right. And what are the red flags that I can watch out for if, I am starting to talk to people? What can I be looking out for where I go, ooh, yeah, they either may not have my best interest at mind. They may not have access to the right solutions. They may not know what they're doing. They, you know what I mean? Like a series of things, right? Because there's multiple aspects to what makes a good professional that can help you in a transaction or a financial situation where it matters. It can, sure. This isn't buying a bicycle, right? Mm-hmm. It's just life-changing events potentially, right?
Yeah.
So,
yeah, and during the process too, it's who are they working with? So a lot of companies are set up where you'll talk to a salesman at the beginning. They'll sell you a number, and then you're working with a processor that's getting documents, and then all of a sudden you're working with an underwriter, and then they might have an assistant, and then that person might have an assistant. So sometimes you can get into the process and talk to 8 or 10 different people, and sometimes that can create, duplication efforts. I got to send documents to a bunch of people, and then there's this emotional stress, and it's like, what is going on? Like, are they going to get the loan done in time? And so being able to work with, one professional or the team that's dialed in, like there's value in that too. Versus calling a 1-800 number and trying to get a status of like, am I closing tomorrow? Like, like my loan's closing, I still don't know. And I got to dial 1-800 and try and figure out if that's happening, so there's like an intangible value in who you're working with too during the process.
Yeah. Great advice.
So like, I personally would rather on buying a home or like a financial investment, or say I'm doing a remodel at my house, I would want to have that person's contact and be like, hey, I know that I can rely on them if something comes up during the process, Yeah.
Yeah. Just, it's hard these days to trust. I'm going to add, like, be careful trusting Google reviews is my own personal thing.
Sure.
Dude, you want to know a great tactic if you're new to an area, you don't have the relationships built up that you could get the endorsements on certain service providers, including mortgages. Call title company and say who are you working with that closes on time and the consumer is happy at the closing table. That's a huge indicator of someone that I would want to work
the industry, title companies.
What's that?
The sleepers of the industry.
Yeah. Totally.
No one ever remembers to think about them and the critical role they play in the whole thing.
But I mean, you know who's closing on time. You know whose processing team, funding, closing is running smoothly. So there's the ops side, but there's also those that you can tell if the client was happy with the loan officer at the closing table. So asking for 2 or 3 of those names and using that as your base is very valuable.
Well, then sometimes too, I've heard title agents where the loan officer doesn't even show up at the closing, and then they're complaining, and then the title agent has to be like they
answering
take
the question
hit for it, yeah. And so that's a really, really good advice, actually.
It reminded me of some advice. So I had a friend whose mom used to cut hair, and she said if you move to a new place and you want to get a good haircut, but you have how do you know who gives the best haircuts in town, right? Or like if you're out on a trip.
Why did you look directly at me when you said that?
Yeah, Ben, why do you how would you know who even gives a good haircut? So Sean, anyways, we're gonna have here's the trick, Sean. Okay, so this was her advice. You call up the like Great Clips or whatever, right? You call up the place that you're looking at getting a cut, and you say, "Hey, I came in a couple weeks ago and got a great cut. I can't remember the person's name. I know that she's so busy though. Can you remind me who that is?" And they'll immediately tell you who the best person cutting hair at the salon is.
Amanda, can I book with Amanda?
Yeah.
What does her
it's
schedule
probably
look like?
Yeah. That's exactly. And yeah. It reminded me of that. That was a
clever way of doing it. But you're right. Title companies are the sleepers of the real estate industry. I kind of imagine title companies are those when you go to a party. They're the individual that's kind of standing on the outsides. They're not looking for the limelight, but they're kind of studying and watching everybody. They know everything that's going on.
And they see it all the way through because they're involved with communication, with execution, timing.
And there's less of them relative to mortgage, at least in our local area.
Yeah.
Way less of them relative to the number of agents and mortgage lenders.
Oh, yeah.
Well, and then
so you'll find that like if there's how many do we have in town? Like, would you say roughly like 15 title companies maybe? There's probably like there might be
if there's more, the others are
they're like really
sleepers
small.
The sleepers, right?
Yeah. There's really probably like 6 or 7 big ones,
sure,
and then another 5 medium size, and then it gets really small from there. There's in our county close to 2,000 or more real estate agents. Mm-hmm. They all have to use a title company on every transaction, more or less.
Yeah.
So.
Yeah. And to Ben's point too of the title company versus going through with your agent, sometimes the agent and the lender may have some sort of financial agreement. So that lender might be paying for the agent's leads. And so even though that lender might not be the best lender or the best, financial advisor to help them,
the agent has a conflict of interest.
There's a conflict of interest. So the title company legally can't co-market.
Yeah.
So they are like that independent, non-interested party. So that's even.
That's some really good advice, Ben. I like that.
Sweet.
So a question in the financial world.
Okay.
So, it's this kind of similar conversation we're having is, do we really have the best client's interest at mind in the financial planning world? Like give us, I'd be interested to hear like your top 3 like questions or like what you're looking for, out for a client. Like how do you get into that conversation after like trying to help a client?
Yeah, I tend to not get too much into the conversation about like the questions people should ask. Not that I shy away from it. I just seem to my attitude is somewhat more, you can look me up. I don't carry a complex system. I don't have a lot of hats I can be changing on you or something. So, I pretty plainly put it in writing for people that I act as a fiduciary, no matter what we're doing or how we're engaging. I have it in writing that I'll act in your best interest and seek your best interests at all times.